Hello, this is Manesh Patel with ichimokutrade.com and alerttrades.com. Today we're going to discuss a crude oil reverse trade. We're going to use our IMTF indicator that we released last week. And we're going to show you how easy it is to look for reverse trades with this new indicator. Before we begin, this is our normal disclaimer to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing it at your own risk. All information is owned by EAI Capital Group, cannot be copied or distributed without a written permission. We are broker neutral, so we support all the charting platforms out there. Today we're going to be discussing TradingView because that's basically where the indicator was shown. Now, let's go to the chart. So here's a snapshot here of crude oil here on a 30-minute time frame, as you could see. Now this is delayed data. The reason why I'm showing you delayed data is I want to show people that you do have ample time to sit there and put on trades. We're not one of those people that teach you how to sit there and put trades on and then you have to be there right in front of your screen to put them on. You need to have time where you can sit there, evaluate trades, optimize, and do things like that, so you have sufficient time here. So again, let's go back to everything. So a reverse trade, we're looking for a setup one way and then it goes the other way. And in TradingView, if you looked at our webinar that we did last week to release this indicator, when something's green, that means basically there's a bullish setup during that green zone. If it's red, that means there's a bearish setup there. Okay, so in this example here, what we have is a green shaded area here. So this is a bullish setup. Now, in order for this to fail, it has to stop at a major resistance, and that's what we're going to look for. So I'm going to scroll back here, just shrink my chart here, and on the webinar we talked about past IMTF values, major institutional levels in the past that basically started upward trends or bearish trends. These purple dots here, you can see a row of them there. I'm going to mark that off. What those purple dots represent is where all the day traders and swing traders from 1 minute all the way up to 240 minutes were thinking the exact same way. In this case here, it was resistance in one moment and then support the next minute. So this is a major level here that basically haunted all the day traders and swing traders in the past. And you can see how well it worked here. And what we're doing here now is on a green zone, we're waiting to see exactly how far this thing will go. And you could see in our green zone that this instrument here, crude oil on a 30-minute, held that major IMTF resistance in the past right there. That was a sign that this bullish setup here was going to fail. All we had to do was then wait for it to close below the green line here, and you can see these purple dots here. That was an IMTF support for all the day traders and swing traders. As soon as it closed below there, we're now setting up for a trade. Okay, so now we're setting up our trade here. This is the first bar closed below, so now we're going to set up for a bearish trade here. And what I'm going to do, as soon as it sets up for close below there, the same purple dots in the past, I'm going to look to basically do a sell limit order there to short this particular instrument. So I'm going to pull out my reward risk tool here, make sure I have a 3-to-1 reward risk to test to the bottom of the consolidation pattern. So that's what I'm going to do next. So I got my reward risk tool here, and make sure basically that's my entry right there, and then I want to look at my stop right there. So I'm going to bring my stop, and it's going to be roughly about right there. So I'm going to adjust that stop in just a moment. There's your pivot low right there. So I want to get to that pivot low right there, which is right about there. Okay, so there's my 3-to-1 reward risk ratio. In fact, it's a little more, so if you wanted to increase and kind of give it a little more breathing room, you could even do that. So a 3-to-1 reward risk ratio to the pivot low will roughly be about right there, where you could even have your stop right there. Okay, so that's your 3-to-1 there. So our goal is to get to the pivot low here. At that point right there, based on Ichimoku rules, there's high probability of breaking down from there. So our goal is to get to that 3-to-1, 300% return, basically take half or 75% of our positions off, and then what we want to do is we want to trail with a tightened stop. You could see that the green dots in here, you can't see them, but it's behind this reward risk, is our trailing stop. Now what's going to happen is we're going to use the red line plus a buffer as my trailing stop here. So you could see that we got out a majority of our positions here, and now what's happening is we got a very tight stop in here. In fact, our stop right now is right there. So you could see even if we get stopped out, we're still going to have a nice profit on the other positions we have left. This is basically a good way to reverse trade here, and that's the way you should be doing your reverse trades. where you look for a setup to fail and then you go the other way if it fits all your criteria and rules. This one did. Remember, reverse trades have a really good way to give you good reward risk. Reason why is when something reverses, it's going to go the other way very harsh because everyone was caught thinking one way. When they caught thinking one way, when it starts going the other way, they all panic, and at that point you see volatility, and that's kind of why you have these big red bars that are just coming down because all these people that were thinking bullish basically got caught with their hands in a cookie jar, and at that point they're panicking and getting out any price at market, and that's what basically causes a reverse trade to give you quick, fast cash. Now that was so easy to do in our indicator that we offered. It's basically a 1, 2, 3 step plan that we showed you just a minute ago. If you haven't seen the video or anything like that, or would like to purchase the indicator, here's all the information here. So you could go to ichimokutrade.com/tradingview. That'll take you to TradingView where you could evaluate the platform there, or you could purchase the indicator. Believe it or not, right now we have the indicator at a very, very cheap price of basically $99 a year. That's it. Okay, and that works in basically the free version of TradingView, which is delayed data or any subscription there, but it's only $99 a year, and it simplifies trading drastically now, where you could easily see the multiple time frame support resistances for all the day traders, swing traders, long term, and you could see the high probability Ichimoku strategy too at the same time. Okay, thank you and have a good day.